Hello class, welcome to week 3. Dr. Nemechek here with the video that is going to be talking about chapters 8, 9, and 10. Now I think that after you have gone through everything in week 2, talking about the basic accounting terminologies that you probably were very familiar with because you have taken accounting 1 and 2, you now have a refresher on the definitions of assets, liabilities, net worth, revenues versus expenses, and cost classifications. So that really is going to be the most detailed of all the mathematical equations that are required in this course, which isn't very many. And if you follow the examples in the textbook, I think that you were very easily able to compute what the numbers were. In week 3, we're going to be talking about cost behaviors and break-even analysis and why we do that. Understanding inventory and depreciation concepts. In fact, these are the things that we have as the cost of goods that we have and services available for sale, and how we depreciate things that we have that belong to the organization, such as buildings and equipment. That is the accounting mechanism that helps us for tax purposes. And then last but not least, in Chapter 10, we'll be talking about staffing, the methods that are used to calculate how you account for 24-hour staffing in a healthcare facility, as well as how that contributes to operations and regulations that we need to comply with. So, take a look at your textbook. We begin with Chapter 8, and you'll notice that we now move into Part 3 of the book, which is referred to as Tools to Analyze and Understand Financial Operations. So these are some of the tools that you're actually going to use, not related to just using spreadsheets and tables and stuff like that to calculate some numbers, but these are the concepts that are going to help you understand why we do some of the things that we do. So Chapter 8 emphasizes the distinctions among fixed, variable, and semi-variable costs, because this type of knowledge is a basic working tool in financial management. That's one of the reasons why we're taking a look at it. There are 5 learning objectives listed on page 65 that you should have a good feel for by the time you finish this particular chapter. Fixed costs are costs that do not vary in total when activity levels or volume of operations change. And you'll be able to see an example of this in the illustrated figure 8-1, which is located on the very next page at the top, figure 8-1, top of page 66. And it essentially shows you a straight line across the graph there that's showing you that fixed costs on a monthly basis are going to remain constant at $3,000 versus variable costs, which are going to be a little bit different in that they vary in direct proportion to changes in activity levels or volumes of the operation. And again, there's an example at the bottom of page 66 in figure 8-2, variable costs, where you see it starts at 0, and for the number of residents that are taken care of in that particular organization, the monthly variable cost goes up because you're taking care of more people as the month goes by. Same thing for semi-variable costs. You'll see that there's a step graph there in figure 8-3, page 67, that shows you that incrementally in $3,000 increments in steps of 20 patients as they are added for a month, that requires the cost for semi-variable costs to go up. So these are really good figures and tables that they've got in Chapter 8 that illustrate for you what it is that we're talking about, as well as some of the tables. Now, a good table to look at to understand this even better is located on page 69. It's got an example of variable and fixed costs there for the operating room side by side, and it gives you totals, and it breaks out for you exactly what it is that we're talking about. Fixed costs go from Social Security payments down to laundry expenses. One equipment expense is listed under equipment, and the rest of them are listed as fixed costs from depreciation of building all the way down to EE Health. And then you total all those across the bottom. So essentially all we're doing is doing a comparison across the board of all the different costs that we can incur that help us to operate a healthcare organization. Now, with all the other chapters in the book, this one is a very short chapter as well. Don't get wrapped around the information and all the tables and charts and try to compute everything, follow exactly what they're doing. This is something that you really want to conceptualize and try to understand the definition of these terms more so than anything else. At the end of the chapter, just as with the other ones, you have an information checkpoint on page 78 that asks you what is needed, where is it found, and how is it used. If you're able to answer those, you will have digested Chapter 8 fairly well. There's key terms for you there, as well as discussion questions, which kind of brings all this information full circle. Then we move to Chapter 9, which is understanding inventory and depreciation concepts. There are 6 learning objectives with this particular chapter that you want to become familiar with. So take a look at those first, and if you are able to answer these things and feel comfortable with knowing them, you will have digested this information fairly well. Now, the concept of inventory in healthcare organizations is when inventory, you have to understand that inventory includes all the items or goods or products, goods, and services that an organization has for sale. And that's what we're keeping track of relative to inventory. We have to keep track of what it is that we have for sale. And the reason that we do is because that allows us to apply costs for what it costs us to sell those services. And at the end, we're going to come out with the cost of goods sold using the equation that is found in the very first part of this chapter. Take a look at the bottom of page 82 where it says inventory and cost of goods sold. And at the very bottom there, it shows you the equation in the simplest of terms, where your inventory is recorded. That's called beginning inventory. You add that to purchases recorded, which are your net purchases together. That gives you what's called the cost of goods available for sale. And then when you sell something, you end up with an inventory recorded, which is a minus from the cost of goods sold, and that calculation gives you the cost of goods sold. So there's always a cost associated with doing business called the cost of goods sold, and you need to understand that even though you're making money at the end of the day, it took you some time to get to that point where you actually had to acquire some type of inventory in the way of products, goods, or services. It cost you something to maintain that on board and hold on to that inventory, and then there was a cost to actually selling it to people and using it, and the profit that you make then ends up with the cost of goods sold. Again, very basic information related to accounting type terms such as first in, first out inventory, or FIFO, LIFO, last in, first out, which is LIFO, LIFO inventory method. And then they talk a little bit about other inventory treatments such as weighted average inventory method and no method whatsoever. They tell you how to track inventory, and again, this is a very simplistic chapter, very short. And if you want to bring this one full circle again, go to the end of the chapter where they have key terms and questions for you that will help you to digest that information and understand it clearly. And in our last chapter, chapter 10, has to do with methods, staffing methods, and how we calculate how to staff our organizations to help us with our operations and comply with regulations that are required in healthcare. Now, one of the things that the author points out to you that I think really is kind of a no-brainer, but unless you think about it as compared to other industries, some people may not understand or realize that many industries work strictly Monday through Friday and run maybe one 8-hour shift, maybe a 10-hour shift or a 12-hour shift, and that's all that they work during the week. So when they are talking about staffing positions that are required to produce the work that their organization has, they only have to account for that period of time. But in healthcare, it's a little bit different, and particularly in a hospital organization where you have patients that are with you 24/7. You've got to make sure you've got people there that are going to be able to take care of those patients 24 hours, 7 days a week. So you have to determine whether or not they're going to be working 8-hour shifts, 10-hour shifts, 12-hour shifts, and how they're all going to be kept in a rotating cycle over the course of 7 days every week throughout the month. That's just referred to staffing. Now, there are, again, 5 learning objectives for this particular chapter. Again, by the time you get to the chapter, if you're feeling comfortable with the definitions and the terms and the questions that you're able to answer at the end, I think that you will have done a good job of deciphering what this chapter is all about. They're going to teach you about productive versus non-productive time. Productive time is simply when an employee is working, they are producing something. Non-productive time is when they are off the clock and not producing something, but yet they are still getting paid. They talk to you about what an FTE is, a full-time equivalent, and that is the basis of analogy that we use to determine whether or not we have the right number of staffing people throughout the organization. A full-time equivalent is equal to one body that works full-time, as opposed to a half FTE, which is a person who maybe works part-time 10 to 20 hours a week. So spend some time grasping the concepts of FTE and productive versus non-productive time. Now, of course, because this is a finance course, all of this has to do with time cost to staffing, and because we have to have staff to pay to be able to take care of our patients, obviously they're going to have some costs that are assigned to, we have to tie costs to assigning those people to our staffing. So if you take a look at the bottom of page 107, you'll see that there's some examples there of calculations that they use to staff the operating room. And they use examples of what it's going to cost them to have a supervisor, operating room techs, registered nurses, LPNs, aides, orderlies, clerical types, and then they total it all up. And they use a number of hours, annual hours paid at 2,080 hours. And you note that that equates to 52 weeks of work. And then they compute that to the number of annual hours paid over 1,950 hours. So just get familiar with that. You don't have to commit those calculations to memory, but that'll give you an idea of how we calculate that type of time out. So spend a little bit of time reading through that chapter. Again, a very short chapter that drives home the fact that staffing and accounting for the people that work for us is a cost that we've got to be aware of, and it does have an impact on the organization. On page 114 of chapter 10, there are key terms, discussion questions, and notes that will help you to bring this information full circle. And then once we finish up with this information, starting this week, we will move into part 4 of the textbook. We'll actually talk about some reporting and measuring financial results and going into a different type of information. I'm very pleased with what I'm seeing so far in the discussion board and the work that you submitted. Again, this is very basic stuff that we're talking about, so none of it is rocket science, and I think most of you are having a very easy time of figuring out what it is to do. If you have any questions, send me an email or call me, and we'll discuss it and see if we can't put you on the right track. So until next week, have a good week, and I will see you then. Thanks.